Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Wednesday, February 22nd, 2023. Before I jump into the charts, I just want to encourage you to please click like. Each and every time you watch the daily Tesla report, it helps us out a great deal. Subscribe to the Wicked Stocks YouTube channel, and please share the content with friends and colleagues. It helps us out a great deal. Also, check out wickedstocks.com. We've got a lot going on there that you never see on YouTube. A daily SPY, daily triple Q. We also put out 2 stock picks a week. Today, that is Tuesday. I do this a day in advance, so I'm doing Wednesday's analysis on Tuesday afternoon after Tuesday's close. But on Tuesday, we put out a stock pick, a 10-minute video on Uber. You might check that out. There's a lot of good stuff going on there. We give you the heads up on what could be a meaningful buy signal into March-April trade. So I'm going to jump into the charts right now for Tesla. I like to start big picture and work my way into the day. We came off of meaningful channel support in early January that is presently in the low 80s to low 90s. On the way up, as you're well aware, we were anticipating the possibility of topping out in the 150s, or this channel structures that are now in the 150s, then in the 160s, as I recall. Positive earnings pushed us through this area and launched us into a 2 to 3 month buy signal to the 249.85 channel top. So that remains in play, holding above the 150s. This is big picture now. A 2 to 3 month objective remains at 249.85. We are a month or so into that buy signal. 2 to 3 months gives this market room, perhaps, to fall back into the 150s over the next few weeks and then turn back up again to 249.85. So there's a couple of months left here in this buy signal. The timing is a bit subjective, but when we place these signals, we allow for rotational, intermediate rotations that can occur. And there may be a downward rotation into the 150s that could take place over the next week or two. And let's jump to that right now. And that would occur if we were to close today below 190.53. This is a combination rising 1/3 speed line. Now, I know a lot of you have asked about speed line construction, and I'm not about, I don't keep secrets. I try to be as transparent as possible. It's just that to sort of show all that, to explain all that, could take 5 minutes in and of itself. So we do need to flesh out sort of a resource section within wickedstocks.com and provide that. Actually, we'll provide it on YouTube for free once we sort of flesh it all out. But we're not really there yet. But nonetheless, rising 1/3 speed line projected off that January low is trend defining by one measure, as is this mostly horizontal channel bottom at 190, 199. You can see them here. I have them as a 4-star support, meaning that the momentum following this January low and the rally that has ensued remains intact above the low 190s. This is bottom picking territory. If your time horizon is 1 to 2 weeks, from here we could rally back to 221.25. If your time horizon is 2 to 3 weeks, 3 to 5 weeks, 251.06 in reach. 251.06 is the daily version. Oh, sorry, that number was not updated. 250.45. So anyway, I'll get back to this. 251.06 should be 250.45. It's the low 250s, put it that way, right? So holding above the low 190s, we could by the end of March or sooner actually reach our objective at 250.45, or on the weekly charts I showed earlier, 249.85. On the other hand, if we close today below 190.53, the 2 to 3 week time horizon shifts negative, anticipating then this rising 2/3 speed line at 146.23 within 2 to 3 weeks. And 146.23 is rising daily, and as it turns out, it will over the next week or two converge with this lower 150s, low 160s, longer term support at this channel, these channel structures. So what am I saying here? What I'm saying is if we close below 190.53, it really is this channel structure again that I mentioned at the top, this channel structure again that I would expect within 2 to 3 weeks of closing below 190.53 today. So If you're bottom picking the low 190s, that's great. Whatever that means to you, if you're a 3 to 5 day swing trader, you're holding out for the 221 and a quarter, 3/8 Fibonacci level. If you're a 2 to 3 week, 3 to 5 week short-term investor, then you're holding out for the low 250s. If you buy the low 190s, this is the area to buy. Your resting bids, however it is that you trade. Some people will wait for the market to test the low 190s and see it come off. Maybe you want to see validation to the upside before climbing on. That is fine. Everybody has their sort of temperament and the way they like to trade. But if we were to close today below 190.53, no good reason to be long, in my opinion, if your time horizon is only 2 to 3, 3 to 5 weeks out. Now, if it remains 2 to 3 months out, you could weather the storm back into the 150s. That would be your call, because ultimately this 249.85 channel top remains in play over the next 2 or 3 months above the 150s. And so I don't know if there's anything else to say beyond that. I will mention that if things get ugly today, I don't expect that to occur. But if we do break 190.53, we could test 180.68 intraday. If we close below 190.53, 173.40 in reach by Friday's close. And over the next few weeks, this 146.23 speed line, which by that point in time will once again have converged with this longer term channel structure presently in the 152.32 to 160.72 region. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's get back to the day itself. Upside 203.24 can contain intraday strength, and below which the low 190s remain in reach today. All the minor points have been carefully chosen. If we push or open today above 203.24, 209.85 is in reach. That's an upside short-term Fibonacci. It's also consistent with the highs of the last couple of days. It is able to contain session strength, but more importantly, I wouldn't recommend going short there aggressively. I think 209.85 is a great profit-taking zone. If you happen to buy the low 190s today and you're a day trader, 209.85 is a good area to exit that long position if you don't like to hold overnight. But I like 209.85 as a session containment level because if we close above it, it essentially indicates the 221 and a quarter to 224.90 region, that long-term Fibonacci area that you can see illustrated here. We came close to testing it last week. It's still able to contain weekly buying pressures in combination with 224.90. And last thing I'll say is if over the next week or so we were to close above 224.90, then our objective at 249.85 is likely just another week or two away, which you can see more clearly here, where I might add 249.85 able to contain buying possibly through the second quarter, and we can fall off in a meaningful way from here. And if settled above, would mark an important milestone to the upside as we continue into later year with regard to Tesla itself. I'll leave you with this image here today. Please click like and subscribe. Check out wickedstocks.com. We put out an Uber analysis today. There'll be another stock pick coming later in the week. And I'm just going to leave it at that. You have a great evening, and we will talk soon.